The focus today is on UK's 46 million voters hitting the polls to decide whether or not to stay in the EU. The uncertainty helped gold earlier in the month, but the metal is now down 0.5% on the day. Is there still a case for gold post-referendum? Joining us now is Axel Merk, President and CEO of his own investment firm. Axel, thank you so much for joining us on KITCO's Gold Report.
Great to be with you.
So it's all about the Brexit vote today. Gold under pressure ahead of the results. Where do you see the metal moving from here, Axel? Regardless of the results here, both sides.
Well, sure. The next 24 hours, of course, anybody knows, and the reason why I say it's a coin toss in some ways. You would think that if the polls are correct, that the UK is going to stay within the European Union, that in the short term gold should sell off. However, what we also know is that everybody knows what's been happening. Positioning is fairly extreme. And what I mean with that is people have taken out a lot of insurance on all kinds of scenarios. So as these protections are being unwound, anything can happen. Now, that said, as we go through this, when we're on the other side of the vote, what's going to happen is that we're going to remember again that there's a Federal Reserve, and they may want to hike interest rates, but at the same time, we also know that Janet Yellen wants to be, quote unquote, behind the curve, slow and gradual, she calls it. And what we have seen is that people have continued to buy gold, even though they know that short term there could be a dip.
So do you have any targets here for gold?
No, we try not to have a target. You put in targets just to revise them the moment you reach them. What we have seen is in our gold ETF, for example, people have continued to buy gold despite the kind of the risk that things could go either way. And what we expect to happen, that some calm is going to come in, and in the coming weeks, what's going to happen is that if the markets are calmer, the Federal Reserve is going to think about raising rates again, and that's going to cause volatility in gold. And then the end of that is going to be that yes, they might be hiking rates, but nominal rates might go up, whereas real rates, meaning those after inflation, won't go up, meaning the Fed is only going to hike rates as inflation is going higher, which in the end is not really a negative for gold. And so the folks buying gold will not be deterred by what's going to happen in the coming weeks.
All right. Another concern is what could happen to the euro or the US dollar in the event that the Brits decide to part ways with the European Union. What are you seeing on the Forex side?
Well, if we see a Brexit, then all bets are off. Keep in mind that we do all of this on the backdrop that asset prices in general are expensive. So anything that spoils the party, in the beginning of the year we blamed the Chinese, now we would blame the Brits. That means we have risk assets, which means equities in particular, tumble. And in that context, though, it's not so sure that the dollar is going to rally, because remember, the euro now is a funding currency. Interest rates are negative, which means that people borrow in euros. That means when times are good, and when they're afraid, they have to buy back the euro. So I wouldn't bet on the dollar. The dollar has been quite weak since the Fed started raising rates, really. And so it really goes against this notion that the dollar always goes up when the Fed raises rates. In the anticipation, it goes up, and now that anticipation has fizzled out, I don't think the dollar has much juice left. In the short term, the sterling would be suffering, although there too, you can have a short squeeze. And so if there were an exit, the sterling would be rather weak. If there were an exit, the yen should be strong. Right now, I predict the opposite, that they stay in. And much of the action might have already been done in a sterling, but I think the yen in particular could weaken quite a bit.
As we wrap here, Axel, how should investors position themselves ahead of the big news? What are the best pre-Brexit bets? Say that 3 times, Axel.
Well, it's kind of late to position yourself, but I think what's going to happen in the case of a Remain scenario, that the one thing that's not overdone, and we do have a stake in that, is financials might be doing well on the equity side, both European and then in the end US financials, as the Fed is going to try to price in a recovery again. Gold is going to be volatile in the coming days. I think the long-term holders are well suited to continue to be in gold. They may want to consider that. In the short term, though, it's a fairly risky bet. We like the risk, but it's not for everybody.
Axel, thank you so much for your thoughts today.
My pleasure.
And thank you for watching. We'll see you tomorrow on KITCO's Gold Report.